Yeah, because all right, so we are going to jump right into it. All right, so guys, like I mentioned, first thing we're gonna talk about today, we're gonna talk about candlestick patterns. All right, we're gonna talk about some candlestick patterns, a little different perspective. I know usually individuals go through, all these different candlesticks and so forth. I'm gonna show you the different types, how, like I said, how they're relevant, how you can really utilize them to your advantage. No, please understand this first and foremost. Please understand you cannot use candlestick patterns by themselves. It don't work, right? It won't work, right? You will cause problems for yourselves. Okay, it's not a standalone. Nothing that I teach is standalone, right? So if ever you think that it's like, oh, I'm gonna take this and run with it and leave everything else out, absolutely not. Everything is connected. Okay, everything is connected. All right, so you want to make sure that you're utilizing and leveraging everything that I share with you. Okay, it's going to become subconscious. In the beginning, it may seem like a lot of information. What is happening here? Who is with the RTP whiteboard? Um, I appreciate you. I appreciate you. Hold up. Okay, cool, cool, cool. All right, good. All right. So what was I saying? What was I saying? Everything is it's basically connected, guys. All right. So we're gonna jump into it. All right. We're gonna dive into it, guys. So I see everybody said that they are ready. So perfect. So let's talk about it. All right. Let's talk about it. As you guys know, I like to utilize my screen, for any notes and so forth that I give. Okay. So let's go in. All right, so just confirm when you can see my screen. Just give me like a little yes. All right, just give me like a little yes. Yeah, okay, awesome. All right, so let's go random chart. Okay. All right, let's go. Okay, good. Everybody can see my screen. Perfect. Good stuff. All right, so we are talking candlestick patterns. All right, now there's a few of them. All right. There's a few candlestick patterns. All right. Like I said, I'm going to be talking about it from a different perspective. All right. I know you guys have been hearing, you are advanced. You've probably been hearing about candlestick patterns, for some time. Probably heard, actually put it in the chat, like what candlestick patterns have you heard about? All right. Or maybe that you use, just drop it in the chat for me real quick. All right. Because I know you guys are not super new, so I want you to drop it in the chat. Okay, pin bar, engulfing, morning star, and okay, evening star. Okay, anything else? Anything else? Okay, hangman, double bottom, doji. Yeah, they got a lot. And the shoulder is more of a chart pattern than a candlestick pattern. All right. Let me get you. Inverted hammer. Okay, good. All right, cool. Right, all these names phenomenal, but I'm gonna tell you guys now, I don't even know all the names, right? Because I don't use all of them. It's definitely not that necessary. Let me see. All right. But I'm gonna share a few with you guys, and like I said, how you can use them and where they make sense to use. All right, and like it's about five that you pay attention to that you could really utilize in different areas of your trading, especially when it comes to entries in the markets. All right. Let me tell you, basically, number one, they do two things. One, they show you reversals in the market or potential reversals. right? Which would then equate to, entries. And two, it will also show you momentum in the market. All right. So one, you're gonna get reversals, and number two, you're gonna get momentum in the market. If you can identify these, then of course it assists you significantly with your entries. All right, guys. So let's talk about it really quick. We're gonna I'm gonna give you guys some notes, and then also, be making it very, 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 very practical. Okay, so that you're aware, and then we go into everything. Okay, so here's the first, type. All right. Like I said, I'm going about it from a very different perspective. All right. So long wick, you got the long wick rejection candles. Right. I'm gonna categorize them for you so that you can easily remember them, right? So you got the long wick rejection candles, right? Those basically would be, some of you guys would have mentioned them, right? You would see things like hammers, you would see things like bullish or bearish pin bars, right? Those are types of candlestick patterns that you would basically see. So basically what that would look like, right? Actually, before we go into what it would look like, basically what happens at these points, right, is this is where you have like the sellers have basically failed to close a strong um bearish move, right? A strong bearish move, actually let me say candle, right? A strong bearish candle, which would then this shows a loss in, say loss or lost, loss in momentum, all right? So it would show a loss in momentum, right? So this is sellers or buyers, all right? Obviously based on where you're at, all right? It would show a loss in strong bearish or bullish, all right? So it shows us basically a loss in momentum. So then, of course, on the flip side, what will happen is that based on where we are, if it is sellers or buyers, all right. So if it's sellers, then it means that the buyers, all right, have stepped in and pushed the market in the opposite direction. In the opposite direction. Okay. So simply put, right, that is what these candles, right, would basically look like, right? So we got a candle like this, and we have these long wicks. Yeah, we got these long wicks. So some individuals, you would know this as a hammer. Some may know it as like a bullish pin bar, like, all in the same. Yeah. Candle with a long wick. Okay. Candle with a long wick. All right. And on the flip side, you got a candle like this with a long wick at the top. Okay. So once again, right, like I said, I'm sharing this with you. Okay. I'm sharing this with you so that you, one, are aware, and then two, you are aware of how to utilize these types of candles. Okay. So this is the first type of candle, and it becomes easier, when, or actually became easier for me when I started to like group them, when I started to like categorize, the types of candles, right? Just really make it make sense, okay? Because we see a lot of them, we see a lot of different patterns, we're trying to remember all of them, and then it's like, all right, what is this? What does this mean? And so forth. Like once you make it make sense, then it becomes very, very, very simple, okay? So, like I said, these candlestick patterns, these show you literally potential reversals in the market. So when you see this, right, again, remember it's potential because it all has to, be, it also has to, It's attached really to structure as well, right? You can't just utilize it on your by itself because you'll put yourself in problems. So it has to, coincide with structure. Okay. So you would see, for example, price reaches your particular area that you're looking at, maybe a supply zone, and you get a rejection looking like this, right? Price rejects an area like this. That is perfect. That is what you want to see, at those points. When price is coming up to your right? Let's just say here, this was a supply zone, right? Price came up to the top supply zone, boom, you got a rejection looking like this. Absolutely phenomenal. That's what you want. All right, that's one of your confirmations that okay, like I said, um the buyers basically have lost momentum. Yeah, the buyers have lost momentum at this point. So, the sellers are stepping in, and that's what we've got this wick, or what we will call like a shadow, right? That's what it basically represents. That's why we will have this shadow left behind because the seller stepped in, boom, and pushed the market down. Okay. So in the same light, when we have, for example, price reaching our demand zone, right? We are getting a rejection looking like this, right? We're getting a rejection looking like this, then absolutely this is what we would love to see, right? We definitely want to see, price rejecting those areas, long wicks, right? Perfect. That's one of our indications, right? So everybody following so far? Pretty simple, right? I'm going to show you it, as it relates to the markets and so forth as well, right? But again, just let me take you along this journey, okay? So that when we get there, it's not difficult to remember. Okay, it's very, very simple. Okay. So that is one, all right, the long weight rejection. Number two, all right, number two, we're gonna keep this simple. All right. Number two is multiple rejection. Yeah. Multiple rejections. Yeah. So basically what that is, of course, that is the sellers or buyers, all right, sellers or buyers repeatedly, right? Repeatedly failing to break an area. Yeah. So the sellers or the buyers have repeatedly failed to break an area. So, for example, as opposed to seeing, like one rejection, candle like this, maybe you might see, multiple, right? Where price, came up to the particular area and, we are rejecting, right? We are rejecting. I mean, it doesn't necessarily matter, right? It doesn't necessarily matter, like what the candle looks like, right? But we are getting that rejection off that supply zone. Yeah. We got multiple, candles. Maybe you might see, like you guys said, maybe it might be a doji at this point or, whatever, right? We get price rejecting that particular area. So it's like multiple rejections. You see two, three, four rejections in a particular area, right? Same thing on the bullish end, okay? Whereas we are getting those multiple rejections, right? So multiple wicks, it's a good sign for you as well. Those things we definitely want to see. Okay. Everybody following? All right. Like I said, I'm gonna keep it simple. I don't get too caught up in all the different names and so forth. The names are cool. Yeah. But just, for me personally, I feel like it's a lot to remember. I like to keep trading simple. All right. I like to keep it simple. So it's like, all right, we got long weight rejections. Yeah. We got multiple rejections. Phenomenal. Yeah, there's two things. Everybody remember those? Like those are easy. If you wanna go ahead now and give them names, and be my guest. Yeah, be my guest. Okay. So we got multiple rejections, we got long weight rejections, and here's the third one, right? Like I said, it's about five. Okay. Here's the third one. The third one is all right. The third one is we have momentum candles. Momentum candles. Okay. Momentum candles. Of course, it does what it says. It shows you the momentum in the market, which direction the market is pushing in, right? Let me type that here for you, for my, oh, I didn't even know I could put borders. Fancy, fancy, fancy. Well, let me put a border. All right, let me Oh Lord, we messing. Oh Lord, we messing it up. We messing it up. Oh Lord, what did we do? Okay, all right, cool. We went to be fancy and messed it up. All right. So you know what that means? Keep it simple. All right. Keep it simple. So momentum candles, all right, shows you shows you simple. Let's keep it simple. Shows you the volume, the market. All right. Yeah. Shows you the volume, the market, which direction the market is pushing in. Keep it simple. All right. Yeah. Keep it simple. Yeah. So momentum candles, what do those look like? All right. So once again, keep it simple here. I'm sure you guys, in the same area. Yeah. So out of our supply zone, all right, we may have like one, two consecutive candles, right? So you may have two consecutive bearish candles out of a supply zone. Okay, that shows you momentum. Okay, two consecutive candles out of two consecutive candles out of a supply zone. Okay, all right, two consecutive candles out of a demand zone. Okay, let's see. You get everybody. All right, everybody following along. Yeah, just move this up. Just move up everything a little bit. Create some space. Okay. So real quick, guys, how many of you were like aware of all of this, in this, I guess, in this manner? That you had them always grouped, or was it a case that it was like, yeah, I always felt like it was a lot to remember, or is it just me? Okay, let me know. To be honest. To be honest. To be honest. Anybody? Or is it just me? Okay, cool. Just me. It's just me. Yeah, because I never remember, like the different names and so forth. All right. It's just like, yeah, unnecessary. So unnecessary. All right, cool. So we have the momentum candles, right? So same thing, right? We got, two consecutive candles, right, out of a demand zone, for example, shows you, where the momentum is at. So when you see those things, guys, I'm helping you to just understand, exactly like what is it you're looking for, like when price trades into your zones, when price trades into your supply zone, your demand zone, your order blocks. What am I looking for? What is it I'm actually doing, to confirm that I'm looking to actually buy or sell, all of this particular area, right? These are the things you're looking for. You're looking for long weight rejections. You're looking for multiple rejections. You're looking for momentum candles, right? And last but not least, all right, so that's one, two, three, four. Number five, right? Number five, you are looking for my favorite one. Anybody could guess? Anybody could guess? Actually, there's six. All right. Anybody could guess? What is number five? Let's see, engulfing. Perfect, right? You're looking for engulfing candles. All right. Also shows momentum, in the market. It also shows, where the market is pushing in. All right. And basically, this is where a candle completely engulfs a previous candle. Yeah. So, sometimes what that may look like, right? Sometimes what that may look like And now some of you guys may know it as like a evening star or morning star pattern, right? And really and truly, and this is how I group them, basically to make it make sense. Really and truly, it's like it's just an engulfing candle, all right? Yeah, it's really just an engulfing candle, right? So you see price pushing out of an area, right? Right, price pushing out of an area, yeah. You got price pushing up, and then boom, market sinks, pushes down. All right, we got an engulfing candle right here where price completely took out the previous candle. Okay, so this is what you would see, engulfing candles looking like. Also, you would see an engulfing candle looking like this. Let me show you an example. All right, in case you may not know. All right. So you would see, for example, here, this candle, this buy candle, completely taking out this candle right here, the previous, sell candle, right? Or it may even be, a previous buy candle, right? It may be just a very small buy candle being completely pushed out by, another a big, candle afterwards. Yeah. So very simple. Love to see those types of candlestick patterns where we have, a big engulfing candle, taking out previous price, right? Taking out previous sell or buy candle, right? Very simple concept. Anybody didn't understand? Everybody's clear on that? What engulfing candles look like, all right? You may also see, for example, like a three candle sequence, right, in one direction. And I mentioned about two candle sequence. You may also see like three candles pushing in one direction, bump, bump, bump. All right. So you see, for example, like this, one, two, three, all right. A third cell candle coming in, boom. All that's also all classified and grouped in momentum candles. So we can really, so it's actually correct in saying there are really like five different types, right? Because the long weight rejection, the multiple rejections, right? Momentum candles, engulfing candles, and then lastly, right? This is lastly, the last one being, all right, the last one being, so get up a little bit. The last one being shrinking candles. All right. Shrinking candles. And simply what that is, that's when price is approaching your area, price is approaching that zone, and what's happening is the candles start to get small. Yeah. The candles start to get small, right? Showing what's going on. All right. Showing a loss in momentum. Okay. So, you start to see, like I said, candles start to get small. All right. So as you approach that supply or demand zone, you're starting to see smaller and smaller candles, approaching that area. Right. So as a question or a statement, those can also be entry candles. All right. So so anytime you see these, right? Anytime you see price, right? Anytime you see price approaching these particular areas, you get long weight rejections, you get, multiple rejections, you get momentum candles, you get shrinking candles, or you get engulfing candles, then number one, price is either looking to reverse, right? Or two, the market is also looking to push in a particular direction. Okay, so it's either momentum or reversal. Everybody got that? Pretty simple so far. Yeah. No, let's put it on a chart. All right. Let's look for it. All right. Let's look for it. Cool. Awesome. So I'm gonna use today, let me use gold as an example. All right. Today, yeah. I'm gonna use the gold setup today. Anybody took the gold setup today? What is that? What is today? 16. Use this as an example. Let me just go to my chart. Simple. All right. All right. So, firstly, all right. So, for example, remember I said everything has to work in conjunction with one another. All right. So, for example, price traded into our zone, our supply zone. That's the first thing. Okay. Now, next thing that we were looking for, all right, just take this out. All right, next thing that we're looking for, so remember, like I said, one of the things that you want to pay attention to is multiple, actually is first and foremost, those wick rejections. Okay, those wick rejections. So I want you to look here at what it is that we were saying right here. Look, you guys see these candles, right? We have the wick rejections and we also have those multiple wick rejections right here as well. Okay. So we can see, price losing bullish pressure and that bearish pressure is coming in, leaving behind a long wick. All right. Leaving behind these long wicks. All right. So those things tell us, okay, well, yeah, you see this? This is an area definitely that I am looking to sell. All right. So we're already looking for the sell. So this is how, you can start, to really um build some confidence, let me say, in your entries. Because what can happen is like, let's say, for example, like here, whereas prices in our supply zone, right, we have those multiple rejections, we have those candlestick rejections as well, right? Those long weight rejections. So two of them that we mentioned are right here in front of our face, all right? Then we have as well, like even pushing out of that area, we can identify and see those that engulfing candle, right? You see this right here, right? You see this engulfing candle out of that area. So price giving us that boom, that momentum down, all right? Price giving us the momentum down right here. You guys seeing this? All right, seeing this here? We got that push right down, boom, all right? We have the multiple weight rejection right here as well, yeah? And you can see how, even out here again, market comes down, push down, boom, straight right back up into that area again. We have another set of long wicks, right? Another set of long wicks, within that area. Okay. So it's very important, again, like I said, you want to make sure that you are using it with structure, right? Because like here, for example, yes, you get long weight rejections and so forth here, but that was not an indication that, okay, yeah, I want to sell. Okay, like that would have been like very, 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 very short term, right? Or even like this. Yeah, because you get a long weight rejection like this, that doesn't mean sell. Okay. So it always has to, work in tandem, always has to work with structure, right? It needs to make sense. Okay. So like even here, where price came down and you have, this weight rejection right in this area, for the market to push up, that doesn't say, okay, well, yeah, buy, right? It doesn't say buy, so make sure, you want to make sure always that we are using these candlestick pattern with structure. Okay, you want to make sure you're using them always with structure. Okay, do we have any questions? All right, do we have any questions? All right, just give you guys a very, very simple example that showed literally all of them. All right, all the momentum, you got momentum candles, as well. Boom, boom. Yeah, we see price giving us that push. We got the rejection candles, so we see both of them, right? Not both. We see all five of them really, within this area. The only one we can't really pick out is, yes, we can, those shrinking candles as well. Where the candles basically just start to get small. Yeah. So like as prices trading up into this area, candles start to get a lot smaller, right? They're not as aggressive, right, as the engulfing candles and so forth. We start to see candles start to get a lot smaller as they trade into, the particular area. Okay. So I want to break this down further so you can see, like it really and truly doesn't matter per se, the like time frame. I would say though that um the the higher the time frame, the stronger the confirmation. All right. But the smaller the time frame, the earlier the entry. All right. It sounds like a little trap, right? The higher the time frame, the stronger the confirmation. The smaller the time frame, the earlier the entry. All right. So, and you will hear me say this all the time. Whatever you look for on a bigger time frame perspective, you also look for on a smaller time frame perspective, right? Because the smaller the time frame you are on, all right, like I said, it's just you just get an earlier entry in the market, but it's the same thing at every level, right? Now, what I will say though is that the smallest, it really depends on it really depends on what's going on in the market, right? But the smallest, you know, yeah, don't let me say that because you can do it. You can literally do this on any time frame, really and truly, right? But the stronger the confirmation comes on a 5 minute, you know, and higher time frame. Okay. Because we can look here, for example, same thing that I just shared with you guys, same area and everything, a 1 minute time frame, right? But here's what's very, very important. The lower the time frame you go on, right? The lower the time frame you go on, you also always remember this. Because I know we could start to leave out things, yeah? On a higher time frame, you're looking at structure first and foremost. Then we would get into like different candlesticks, whether it may be engulfing candles or maybe a rejection in the area, etc. We start to look at those things. What happens though, where a lot of traders go wrong is that when they get into smaller time frames, all they're looking at, maybe just if you're accustomed just looking at candlestick patterns, they come onto a smaller time frame and they just look at a candlestick pattern. So for example, they may just look at an engulfing candle, yeah, and get trapped. So they may just look at this push down and say, okay, whoops, engulfing candle, let's go, let's sell, right? And that's where you can get, trapped in the market. So here's what's very important when you come on a smaller time frame as well, structure. Mhm. Structure, right? You need to see those breaks in structure regardless, right? On a smaller time frame. So like I like this example right here because although yes, we get like an engulfing candle right here, look what we have right here too, right? We have an engulfing candle right here. Price did not break this structure, right? Price didn't break that structure. I mean, that's just who it is, all right? So, what's important is that you're still always looking at structure, no matter the time frame that you're on, whether it's 5 minutes, 1 minute, 3 minute, etc. Always look at structure. Okay. So what we'll say is to build your confidence, start on a 15-minute time frame. Yeah, it's going to give you a later entry into the market, right? But start on a 15-minute time frame. Okay, build your confidence there, to the point where you can then when you step down to smaller time frames and say, okay, cool, I know what it is that I'm looking for. Okay, I know what it is I'm looking for. So everybody cool with the candlestick patterns, all right? We get into more like as it relates to entries and all that good stuff, as time progresses, all right? But everybody's okay with candlestick patterns, how we can utilize them. If you got questions, don't know, what I mean? Like, please go ahead, ask them. I always say no question is a stupid question. The only stupid thing is not to ask. All right. Don't feel like, oh yeah, I got it now, and then you walk away and I don't got it for real. Okay, all right, cool. Everybody saying yes? Okay, perfect. All right. Cool. Next thing that I said we will touch on, right? Don't talk about it too much, don't use it too much, right? But I like to expose individuals. We got some persons, I know we got some individuals, Shaki, have him come and do like a session and so forth too on like Fibonacci, right? But I'm gonna give you guys like a basic rundown of it, how I would have used it in the past, how you could use it if you're someone that use Fibonacci. Anybody uses Fibonacci retracement? Put in chat. All right, you can just put a me, a yes, a I, put an F, put anything. Let me know. All right, I'm gonna show you how it can be useful. All right. Okay, cool. Let me show you how it can be useful and how it can also stop you from entering the markets too early. Okay, so some person says yes. Okay, cool. All right, I'm show you how it can be useful and how it can stop you from entering the markets too early. All right. So when I'm using my fibs, all right, I only use a few things. All right. Yeah, I can't remember the last time I used a fib, to be quite honest, because I think what happens over time is that it gets like it becomes subconscious, right? Like the purpose that I use them for, it becomes subconscious, right? I know some individuals use them as well as targets, right? I only utilize fibs for entries. All right. In the past, I have only utilized them for entries. All right. I know persons like Shaki, utilize them for targets and so forth in the market as well. Okay. So I have him do a more in-depth session on it. But I mean, just to expose you guys to it, like I said, like I always teach, number one, we know that the market always moves like this. Yeah. We always have higher highs, higher lows. The market's always pushing up and pulling back. Okay. Now, here's what's very, very important when you are using a fib. All right. So let's say price push up, right, from this low to this high, right? You take your fib, use put it from a low to the high as well, all right? From a low to the high, okay? And here's the first thing. Here's what's very, very, very important, all right? Remember I was spoken to you guys about discount and premium prices, correct? Anybody remember that session? All right, we went through discount and premium. Right? And if you're in the academy as well, you definitely would have seen that. Also, Abel would have went through discount premium as well. Okay, perfect, good stuff. All right. So here's the thing about this. All right, I'm gonna just put some lines in. All right. If you are in a buying scenario, right, this is how you stop yourself from buying too early. Okay. If you're in a buying scenario and we are looking to enter the market, we know that the market is going to pull back. Last week we went through pullbacks. We know the market is going to try to correct itself. The market is trying to rebalance itself, right? So we're going to see the market do like this and start to pull back down, right? It's always going to happen, like it will always happen. So we don't got to worry if it's going to happen or not. It will happen. Okay. Anything above this 50% area, right? So if you look at the fib, right? If you look at the fib, right, it just measures and shows you, okay, well, here to here, this is 100% of this move. Okay. That's really true. All the fib is 0 to 100% of the move is here, from here to here. All right. That is 100% of that move. Okay. So we see the 100% here at the bottom. It's called a fib retracement. So it's showing you how far the market could retrace, how far the market could pull back. Okay. So anything, to this point here will be considered a 50% retracement. This is 50% of this move up. Now, this right here, this anything above 50% is considered to be premium. All right. That is premium prices. We don't ever buy in premium prices. Okay, we don't buy in premium prices. We always buy in discount prices. Yeah, we always buy in discount prices. So what are we looking for? We're looking for the market to trade down into these areas here, all right, which is below or above. Let me say below, all right, which is below. It's really above 50%, but you guys catch what I'm saying, all right? It's really below here into discount. Okay. It's really below into discounted prices, right? So we're really looking for the market ideally to come anywhere from below 61% all the way down, into I would say at most 88%. I mean, quite frankly, guys, the market could pull back almost 100% of the move. Yeah. But so the ultimate aim is we are buying below 50%. So if at any time you get tempted to even buy above 50%, you are buying too early. All right. I remember like we will always say, right? Like we will always say you want to buy as low as possible, right? So if what you're looking at with the fibs, right? Personally, I'm always looking at, from let me show you my fib numbers, right? I'm always looking at this 786, right? To this 886 area. I'm looking to buy as deep as possible, right? One, because it's going to reduce my risk. Two, it's going to increase my reward, right? So let me show you this, from a chart perspective. Same things, right? So even as we look at what's even on the screen, and I'm going to bring it all the way down. All right, I'm going to bring it all the way down to even that trade that I was just sharing with you guys, so you can see what it is that I'm saying. Okay, so everybody's following. Give you guys a quick like crash course on it. All right, how you can utilize it, so forth, how you can stop yourself. Yeah. So let's say, for example, like right here, all right, let's just say this was you're looking for sells in the market. Yeah. You're looking for sells in the market. You're dragging your fib from the high to this low, right? You're looking for the retracement. Okay. You see anything above the 50%, waste of time. Okay. You don't want to be selling in these areas here. Okay. Sell as high as possible. All right. I may be on a higher time frame, but follow what I'm saying. Okay. Sell as high as possible. So we see the price and there it comes in. There's the 100% of our move. Okay. Larry into 100% of our move, and then we start to get, the market dropping once again. Okay. Now we come down, smaller time frames. Yeah. To show you what I'm saying, even right here with this. All right. So here we have price push down. So we went from the low to the high, sorry, the high to the low, all right, because we're looking to sell. We're just dragging from top to bottom, all right? And we're look at how the market pull back up here, right? Look at how the market pull back up, boom, right, into that 786 area, right? And then we started to drop again. Okay. So remember, please remember, right? Everything is working together. Okay. So it's not to say, okay, well, yeah, I got the market pushed down. Let me just pull a fib on it and then enter at that point. That you got different things that you could confirm your trade with. Right. And we're gonna get into like, we talk about candlesticks, we're gonna get into order blocks, all those different things as time progresses. Okay. But literally you can see market pushes down, pulls back. When it pulls back, all right, you want to get as deep as possible a pullback before you decide, okay, well, yes, I am going to sell this. Okay. So you want to see, price trading to, right? These types of areas here. Okay, these types of areas. All right. Want to see the market come into that 786, 886 area. Then we drop. Some individuals will tell you, like 618 and so forth. Personally, I feel like the market trades so much through the 618, and goes deeper, right, or higher or lower, depends on if you're buying or selling. The market will surpass that, 9 out of 10 times, to be quite honest. All right. Seldomly would see the market, pull back to areas such as that. Okay, like very seldom. Okay, so even to let's go to the setup that we just had, smaller time frame perspective. So even here, once again, say we did this, right, from the high to the low. Okay, from the high to the low. Well, market pull back almost 100% of our move. Then we start to get the market pushing down. Okay. If we flip this, right, price push up and then pull back. All right. Price push up from the low to the high. All right. This move here, it was like 50% of our move. All right. This is like 50% of our move now. And then price continue to go up. All right. So this is where, all right, this is where I'm sharing this with you because I want you to see, okay, well, it's not just put your fib on a move and that's it. All right. Nah, you want to take everything, you got to take other things into consideration. All right. It's very important that we take other things into consideration. So I'm showing you how you can utilize it, but it's not a standalone. Okay, it's not standalone. This is help. This is not, run it by itself. Okay, this is assistance for you. Okay, so even again, like the trade that we did this morning, yeah, we have price push down, we brought structure, all that great stuff. We put your fib on it, for example, from the high, sorry, to the low. We come across, you see how boom, market traded right back up into this area, right? Same areas that you're looking at, yeah, that we would look to selling. Okay, we get rejection, etc. All of the confirmations that we need, boom, market drops. Okay, so and then as you go down, like same thing just applies over and over and over again, guys. All right, it's the same thing. Like again, like I'm just showing you. This is how you can utilize the pullbacks. This is how you can utilize the fib, for your pullbacks as well. Okay, so that makes sense for everybody. That makes sense. Makes sense. Makes sense. Yeah. It's how it works in assistance, right? This is how, you bring everything together. Okay? You do it in the replay bar, please. What do you mean? So like this. Okay, so you got price push down, take your low, right? No problem. Price comes down, take your low. So again, take everything in consideration, all right? Market pushes down from the high to the low. This is the area we're looking at, all right? This is the area that you're looking at. All right. Not just because of a fin, right? But this here we're looking at. Market pulls back up. Slow it down a little bit. All right. So we got rejection, rejection, rejection. All right. Slow it down a bit more. So we got price rejecting these areas, reject, 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 all those long weight rejections we spoke about. And we get the market push. All right. Now, even after this push right here, all right, even after this push right here, we get the market retest the area once again. Okay. So like remember everything is just it's confirmations. Okay. We get for after the rejection, market push down, boom, pull right back up into the same area. If you wanted to be, technical, you go again. All right. But with that, price traded right back in, same area, boom, dropped again. All right. And we see it just all right, continue to go. Yeah. So literally, that's how you can utilize Fibs as well. I really like to just emphasize uh just understanding structure, understanding candlestick patterns, how to use them and so forth, right? So, I showed you guys how to use the wicks, all right, the multiple wick rejections and so forth. All right, that's no problem. That's cool. All right. I should also utilize the multiple rejections, the weight rejections, and so forth. Like you can see how those weight rejections play a significant role by just looking at the chart. All right, let me show you just a few, especially when it comes to certain areas in the market. All right. So you see like here how we have see here how we have, for example, price pushing up. Boom, we got that engulfing candle, all of that area. And we get price pushing up. Okay. And we see how we have like all of these, with rejections start to come into play. Boom. All right. Then we get the market start to push up. All right. We get some more on a higher time frame. And then I'm gonna give you something to tie this all together, just how to make use of it, right? How to make use of it. So use these examples. What is the best time to enter using that example? All right, cool. All right. So we have here, boom, price pushed up, same thing, weight rejection right here. All right, this is on a 1 hour time frame. Probably came down, smaller time frame. Let's see if we could just keep this area. We take a look at this. All right, so we getting those big rejections in the area here. Even right here, this is a weight rejection. Boom, big engulfing candle. All right, so we're gonna talk about that. Let's talk about that in a bit. Yeah, let's talk about that in a bit. So again, once again, multiple weight rejections. You see how again they play a role, right? Remember, it shows you potential reversals, right? When you get all those wicks, it shows you potential reversals in the market. Okay. Once you remember that, you're good to go. Engulfing candles, momentum candles, right? You see how the momentum candles plays a role. Okay. The engulfing candles as well. All right. Now, let me talk to you guys about these from the momentum candles from an entry perspective, right? And then we'll wrap it up. So I showed you guys, the wick rejections, the multiple wick rejections. I showed you, the Fibonacci, how you could utilize them, how you could stop, from like entering the market too early, right? Because I know that's the struggle for some people is that, okay, what kind how do I know when a pullback is done? How do I know that, this pullback is not, it's not done here, when we had the market just, trade back right here to this point. How do I know that it's all the way down here, right? And that's where always say, look for the market to pull back, basically, above 70% or more. All right. About 70% or more. You got the market coming back in those areas, then start to look for entries. Okay. Every time it may not be the case. All right. Every time that may not happen. All right. But more often than not, that's what you want, right? You want the market to pull back, because even like a scenario like this definitely didn't pull back here, 70% of this move down, right? But in a scenario like this, that's where different entry models and so forth come into play, right? But it's like you want as low a risk as possible when you're trading. Do you want every setup or you want the low risk setups? Which one do you want, guys? Talk to me. All right, talk to me in the chat. You want every setup or you want the low risk ones? Tell you, bro. That's it for me. So like every trade I may not get. There may be some trades where the market just runs away, and I'm cool because it's like, bro, like I had no entry on that. It's like, where would I have entered? I have no idea. Where would my stop loss be? 100 pips? Absolutely not. I'll leave it out. All right. There's no way I'll ever take 100 pip stop loss trade, and my target, for example, is 100 pips. That don't make sense. All right. I'm trying to low risk as low as possible and increase my reward. All right. So I'm always looking at, okay, where could I possibly enter the trade? All right. What would have made sense to do? Okay. And that's why you don't like catch everything, but just know that when you catch it, that you good. All right, you get it. So let me use some examples here real quick now. Like let me talk about the like momentum and engulfing candles. All right. Again, please remember you're using these things as it relates to structure, right? So here, perfect example. You're looking at engulfing candles, right? This right here, engulfing candle, right? Also, you can see, I think we will call this, what do you call this? Evening star. All right, somebody that's like very, versed in the candlestick patterns could tell me, all right, evening star, okay, perfect. All right, like I told you guys, I don't remember the names. but I know we know what it's looking for, yeah. So there's some things that I don't even try, I don't even try, yeah. But yeah, we're looking for this is what we're looking for. You want to see the momentum in the market, yeah. So anytime you get like a move like this, boom, market gives you that moment, that engulfing candle. So price, you see price completely took out this previous candle. All right, let me use. Oh Lord, all right, hold up. Let me see if I can find out this area real quick and show you how you want to make use of this. All right, so this is how you would when you're trading. This is how you want to be looking at the market. All right. So let's say you're here and this is what is happening. We're on a 1 hour time frame right now. Okay. This is what's happening. You got a big engulfing candle. Actually, let's go to a 15-minute time frame. I want to encourage you guys when you enter in the market, enter on 15 minutes or lower. All right. You want to enter on a 15-minute time frame or lower. All right. So we got an engulfing candle right here. Boom. All right. We can see how price went ahead. And last week we spoke about imbalance. Yeah, we spoke about fair value gaps. How many guys remember this? All right, how many guys remember fair value gaps? How many guys remember imbalance? Yeah, perfect. All right, cool. So let me show you how you utilize it. All right, let me show you two. Number one, we got the engulfing candle right here. Bang, market pushed up. Yeah, same thing here. Bam, market pushed up. All right, so we got that engulfing candle. What was left behind was a gap. All right. Market left behind a gap. Okay, awesome. All right, phenomenal. All right, that's what we want to see. Yeah. Next thing is that, so I'm literally getting into structure now. Okay, I want to help you. I'm literally getting into some structure now. All right. Sorry, to some entries now. Okay. We got the market create an engulfing candle. We left behind a gap, right? And we also broke structure. All right. We also broke structure. Boom. Market traded above this last high. You guys see that? Let me know if you're following. Let me know if you see this. Okay? Let me know if you see what I'm saying. Beyond Seth and Tariq. Anybody else? Okay, good. Awesome. All right, cool. So you got price break structure, number one. Number two, we have the imbalance created. Phenomenal. All right. And number three, we got this engulfing candle. Great. Right. Now, I'm gonna bring this in later on. All right, when we talk about order blocks. All right, I'll just mention it now. Okay, and right here, right, this is an area that we will be looking at for an entry. Okay, now we just spoke about Fibonacci. You want to get fancy and use Fibonacci? All right, cool. I want to see where I would enter this market. All right, I pull it from the bottom to the top. All right, let me see where I am looking at. Okay. So we see, all right, areas of entry, we're looking at above 70%. Okay. Above 70%, into this area here, 886. Okay. Cool. So you guys, we see how we just brought everything together now. All right. It's great. Phenomenal. We got all those things. So we already looking at, all right, we're already looking at right here, boom, where the market traded in. Fantastic. All right. So that's the area that we're looking at. Imbalance, great confirmation. We know the market is attracted to that area. Order block, market traded down into that area as well. Fair value, not fair value, the Fibonacci, right? Price traded past 70% of our move. Phenomenal. Okay. Next thing, all right, next thing we got here. So we come down. I say we come down into a smaller time frame perspective. All right. What do we have here from a candlestick perspective, guys? Talk to me. What do we have here from a candlestick perspective? Okay, we got rejection. All right, perfect. All right, we got rejection though. So we in the area. All right, this is all trading is. Right now at this point we are in the area that we want to buy. Fantastic. What do we need to see? Rejection. Right? We get rejection, and then we get momentum. Yeah, we get engulfing candle. Fantastic. It can't get any more beautiful than that. Right? It's like at this point, it can't get no more beautiful than this, right? Every time it's not going to work, absolutely not, right? But more often than not, it will. And this is how you build your confidence when you see it happen more and more. It's now okay, great. Prices in my area, phenomenal. Weight rejection, great, right? So here's what you do, right? I'm giving you guys some insight into some entries. Here's what you do. Number one, I call this being first to the party, right? You got to be first to the party. When you get that weight rejection, you are in the market. Okay, you are in. You get that weight rejection, you are in. That's entry model number one. You are first to the party. It's like you are there first. Bam. I pull the trigger, I'm in the market. Okay. That's your first entry model. Yeah. It's more risky, right? But you know, it works. Yeah. It's more risky, but it's just based on principles because we're not guessing at this point. This is the area that we're looking to enter in. We're waiting for that weight rejection. We got it, all right? So that's your first entry model. Yeah, you're first to the party. The second and safer way to enter the market now, you are waiting for, what are you waiting for? You're waiting for market to break some structure, right? So even on a 5 minute time frame, this was the last high here that created this low here, all right? So what do we want to see? We want to see the market push past this high, all right? So market boom, broke past that, all right? We have an engulfing candle right here, all right? So we want to see price then trade back in to this area before we take our entry. So second to the party now, you wait for that break of structure, you wait for the market to pull back, right? Again, if you want to be fancy, use your fib, right? You're looking at areas that as you start to do it, you see, okay, you could estimate or guesstimate, where more than 70% will be, right? So 70% is that area right here, right? And you're looking for price to then bam, right? Trade back into this area here. And this is entry model two. Bam, right? You're in the market, even smaller stock at this point. Boom. That's entry model two. All right. You're in, bam, gone. All right. Next thing, same thing happens again. You can see three candles, bam, bam, bam. That's momentum. It's engulfing. Yeah. Market created imbalance as well. Okay. So now we can see here, all right, imbalance created, phenomenal. Price up, previous highs. Okay. Here, all right, highs that were created. We see price continuing the break structure. All right. Price traded above these sides. Okay. Everybody seeing? Everybody following? I'll make sure I'm not losing you along the way. All right. So we got the imbalance. Okay, good. We got the imbalance. All right. If you want to step back up onto a higher time frame, you can. Okay. So we see here where we are at. All right. We got the imbalance created. Right. It's much bigger imbalance area, on a higher time frame. All right. And then we got price could definitely trade back into this area. Once again, you want to be fast with the fibs. All right. We know where we're looking for price to trade back into. All right. Cool. So we got all that. Okay. We're gonna just stay down on a smaller time frame for now. And we just look for the same thing. Wait for price, trade back down. Oops, hold up. And see. All right, cool. All right, we're waiting for price to pull back in to the area. And for me, it's like we either gonna get it or not. All right. Me, all right, are you gonna get it or not? So price literally continuing, all right, to push up significantly, take out all of these highs. Yeah. Boom. but we still got all this imbalance left behind. Yeah, still got all this imbalance left behind. Market pushing up. We didn't get no real pullbacks. Get all these small pullbacks here. Like these don't count, in my opinion. These don't count as a pullback, really. Right? We didn't take no like no real lows. Market just came here, boom, pushed up again. Here, came back again, up. Right? So looking for price to trade back into that area. Get it, bam. And we get the price. You see how it came right into the area that we're looking at? Yeah. Price came straight into that area on a 15 minute. It's just a wick, right? Higher time, smaller time frames, you have more of an opportunity. So we got price, sink down into that area, push back up. Probably might have had to get in, on like a 1 minute time frame. All right. So you see how price straight into that area, engulfing candle, all of that area, push down, and then we get in the market basically starting to run away. All right. But same principles apply. Just more patience required. Okay. More patience basically just required at this point. But you see the same thing happens over and over again. You even get another opportunity. All right. If you get another opportunity, even with those entry models that we mentioned, is either you taking the first entry or taking the second entry. All right. So here, um, 5 minute, 3 minute, and you start to take up entries now at this point here, price break past this point, boom, pull back, and then you start to push again. All right. So you guys capture what I'm saying? Everybody following? All right, you understand? They show you guys literally how you can utilize the candlesticks, how you utilize the gaps, how you utilize fibs, right? How you can use it all basically to get, what it is that you're looking for, even as it relates to an entry in the market. All right. It's no magic. There's no one thing, right? But it's just really a series of confirmations that you basically can have as start to navigate these markets. All right. That makes sense. Everybody following? It makes sense. We good? Follow, follow, follow. Let me know, let me know, let me know. Mostly need to practice market. Exactly, correct. All right. That's all trading is practice seeing it, all right? And then practice doing it. All right. Practice seeing it, practice doing it. I'm telling you that it builds your confidence. As it builds your confidence, then you go from there. All right. So yeah, guys. All right. Hope everybody, found value in this session. Really go ahead and apply. All right. Really go ahead and apply. Here, for example, price pushed up, boom, engulfing candle, price pushed back up there. So we're sticking up at this point. For this, we have to see, the market break above one of these areas. See smaller time frame, we got price just chilling at this point. Yeah, market's chilling here. Maybe consolidating here. All right. So, in a market like that, just wait for it, all right, to give you that momentum shift. That's all you want. You waited for it to give you that momentum shift. That's how, you utilize those candlestick patterns to assist you in the market. All right. So yeah, guys, everybody that's here. I see Kurt here. His session is finished. All right. We are wrapping up. Sure, all 28 persons on the line. Guys, let me know, man. Did you find value in the session? Or was it like, nah, bro? You know, this was not it. This was not it. Always, okay, awesome, most definitely, perfect, good stuff. All right, so hope you guys really go ahead and implement. All right, remember it's practice. All right, now I know more about how to use the fib retracement. Yeah, all right. I didn't like Fibs know and understand how to use it. Yeah, because what happens is that people put this they call it the golden ratio, right? And in 7 years, I've never seen the golden. It was never golden, bro. That 618 was never golden for me. It was more like bronze, like it was like it was always bronze, sometimes like a fourth place finish, it was like this that golden ratio, boy, it was never golden. I was like, what is going on with this golden ratio? Because it just ain't happening. Not right. And and then I started to realize, all right, this was actually be going on. All right, it was brass Akeem. All right, this actually was be going on. So like I mean like for example, you know, like ain't nothing golden. It ain't golden. It is not. All right. This retracement is going deeper. They're going into 786. Like always. I'd never seen a retracement give me like a 618. It's just like, bro, like that has never happened. I don't know. All right. We got like almost 100% retracements and so forth. Right? Yeah, bro. So like I feel like that was one of those manipulations, put it out there to the public, let everybody have it, you know. And everybody use it, golden ratio, and just collect a bunch of liquidity, a bunch of equity in the market. So I don't know, man. It never really.
I only saw one person make this look make this work consistently, and that was in a crypto space. So I don't know. I don't know if crypto would just be different, but yeah. Still, I'm not looking for a number. Like I ain't gonna trade something and just be like, oh, when we get at this number, I'm gonna buy or sell. Nah.
I tell you, I never seen it. 70% or more. I don't know, man. I know. I know. Maybe just me. I don't know. But I guess a golden for some, maybe bronze for me, but yeah, guys, so I trust that everybody got value from the session. Um, Tomorrow morning we are back at 9 a.m. Right? So if the retracement seems better for scalping, nah. You could use it however you want to use it. Remember, it's to help you to get an entry in the market, really and truly. All right. I don't know. When people say scalping, you know what scalping is? To me, scalping is in and out of the market in like seconds or minutes. All right. Like you take an entry, you get 3 pips, 2 pips, 4 pips, 5 pips as a take profit, you out of the market. Like as a scalp. All right. That's what it costs to be a scalp. And if you got to be out of the market in 3 pips, 5 pips, it tells me you're unsure. That's what it says to me. Right. Like if you're just jumping in and out of the market, that's unsure, rather than we be talking precision basically, right? So when they're talking like 5 minute entries, 1 minute entries and so forth, it's just more precise, with the entry and so forth in the market, right? And truly. So yeah, you can use it for anything, really and truly. Um as a principle, remember I told you guys I'm gonna share principles, not strategies with you. So you can utilize those things universal, all right? You'll see that the market is gonna pull back 70% or more. Yeah, right? You're gonna get pullbacks in the market 70% or more across the board. It don't matter what you're trading. All right. You're gonna see this everywhere. All right. Like, I don't know. How do you find Apple? Oh, look, I got it. Look.
You stop sharing, okay?
Oh, you can't see my screen no more.
No, sir.
Oh, got you.
You were
Yeah,
looking at
one sec.
Apple stock.
Yeah.
You should look at
You look at
Peloton.
you try the retracement. You said retracement, retracement, high, you know, it's saying that's a high retracement. Principle, really, truly, like, you see the market does the same thing. So that's why I feel like as though you could trade forex, you could trade anything, right? It's the same principles apply. Oh, shoot. My phone was ringing there, guys. Sorry about that. Yeah, I was just saying, like you can trade forex, you can basically trade anything, really and truly. You see the same principles basically at play. You got engulfing candles, we got imbalance, we got, you know, the same. That's like it works to me, Kurt. You gotta break a structure, like market push up, pull back down, bam, push up, smaller time frames. We got we got candlestick rejections, all right, like got engulfing candles, bam, imbalance, price pull back, trade into the same area, push up again. Then I'm just saying, it don't matter. It don't matter. It don't matter. But yeah, guys, that's it for the session today. Anybody got any questions though? About anything? Any questions? Or are we all good? All right, guess we all good. All right. Okay, good, awesome. Perfect, guys. Well, again, we are back on the bike run, 9 a.m. Atlantic Standard Time, 8 a.m. Eastern Standard Time, Monday through Thursday. We're looking at, an Asian session. Very soon, individuals be asking about it. All right. And we're gonna be asking about like an Asian session, London session type of something. We're gonna look at it. All right. We'll see. All right. But yeah, man, it's always been a pleasure. Continue to plug into the information, continue to plug into the education, continue to plug into what's called the academy. All right. Abel shares a ton of value within the academy. So make sure you guys are locked on. All right. Can we get a recording? Yeah, I'm gonna send you guys, remind me to send you guys a recording. Sometimes I drop it in a WhatsApp that I have. All right, but remind me to send you the recording. Maybe in the Discord. All right, I'll put it in the Midas Touch signal. All right, I'll put it in the Midas Touch signal. So if anything, drop a little message. Remind me to drop it there. All right, so you guys can have it as well. All right. So be blessed, guys. Have a good one. All right. I'm gonna see you on the bike run. All right.
Hey,
What's timing?
it's the bank run.
Okay.
Run bank run.
You better run.
Run bank.
Now I would
bank,
run too if I saw us in the streets. Pure menace to the markets, we murdering the beast. Bringing fear to beers, though they red in the eyes. So jumping out the window, typical, I'm not surprised. No bulls wanna act tough. Big mad, big gang. We clearing out the vault, walking up with big bags for the fam, huh? 90 every run to play. Just me to set that rendezvous, we might just hit a bank or two. Leaving nothing at the table, just good risk and take profit. We train by able, there's one of you and a lot of us. The takeover, you'll be hearing a lot of us, and there's a lot of us. For little old me until the wealth gap shifts, rock with RTP, university, study, get that play for free, 99. Your attention in time, I'll see you. It's the bank run.
You know it's a place, grabbing gold out of safe, and you gon' get a taste.
It's the bank run.
You gon' get your cut too. You, and you is what we all do.
The bank run.
You know it's a place, grabbing gold out of safe, you gon' get a taste.
It's the bank run. Run bank, bank run. Run bank, the bank run.